The last section in every project is what we call the expenses. The expenses section, this is where we register actual payments for expenses, because we don't have the only expected expenses are found in the estimates up there, and here are the actual expenses. The actual expenses, we have the material invoices and material payments. We have service provider invoices and service provider payments, subcontractor invoices and payments, manpower invoices and payments, and other invoices and payments. Remember the 5 categories that we categorize every expense, either to be material or subcontractor or equipment or labor or others. This is exactly what we're doing. That's how we do. For example, when we do service provider, when we do subcontract, when we do manpower, when we do material, and when we do others. These are the 5 categories that we have. Sometimes, for example, as you can see, sometimes you pay against invoices, which is the normal case, but in certain places you pay direct without an invoice. You do a payment without an invoice. So it depends on in what country you're in. Some countries will accept only payments against invoices. Some others you can have a payment without an invoice, and the system will automatically handle this issue too. For example, let's talk about a material, or let's go here to a service provider invoice. That's a service provider. When you do an invoice, for example, this one or this one, let's see this. 6. It's the invoice is for you must say to what phase of the project are you in. The system will automatically suggest the phase, what phase you're in, and you can modify it. Why? Because we need to know when did we make this expenditure, and in what phase did we make it. On what items are we talking about? So this is the 6 exterior finishes. Bill number 47, equipment invoice number this, and because it's a service provider, so we're talking about equipment. Approved. The price is 396. Let's go inside it and see what's in it. You see this amount. It says this amount was paid. We can split in details. We could say that this amount for stone decorations, this is for stone cladding, this is for sewer pipe, this is for stone walls, backfill walls, this is extra water pipes, and for tree planting. You see how we're distributing the bill in details to know that this amount that we spent on this excuse me, project for the phase, the 6 interior finishes, with this service provider, it's been distributed on these items, and these items to make sure that at the end I want to know what I expected each item will cost me and what actually each item costed me. This is exactly where you do cost control. That's what the system does. It does perfectly cost control on an item by item basis, on a phase by phase basis, and on a category by category basis. All by just when you enter the invoice, you just need to split that amount in various places. If your invoice came to you this way, would be really nice. If it came to you as a bulk, one single thing, you can split it the way you want to also. The same thing under subcontractor invoices, same thing under subcontractor invoices, and same thing under subcontractor payments. For example, when you do, this is payment with an invoice. You see all these payments with an invoice, and this is, for example, payment no invoice, because I paid this person before receiving an invoice from this person. We might receive the invoice later, or we might receive the invoice, or we might not receive the invoice, but we need to register it in Prosper to make sure that every single penny that we spend on this one, on this project, has been registered and accounted for. When we go to subcontractor invoices, for example, or some service provider invoices, you can run the reports. These are the reports. These are the daf'at, means the payments, or the service provider statement. You can show the state. Let me show me the statement for this service provider, and I will see what what invoices did he present me, and what did I pay him. Invoices, this is for this project. He worked only for this project, so payment against invoices this, payments without invoices is this, and the balance is 0. So this is exactly, it will tell you exactly what, from what bank did we pay him, what, and every single detail, to make sure that we covered the expense in a way that is really standard and trackable. So every single thing is trackable. For example, this, you see the status is called approved. If we go to the history and we see the history, will tell me during this time, this hour, this person performed this action and put it in this status, and after that this person put it in being revised, and after that this person put it in approved. So it's very nice to know what happened to every single document, who did what when. For example, this one, let's see the history. If we go to the history, it will tell you that inserted and auto, and what happened to it at any time. This will cover our expenses section. I'm not going to go through the paid transactions and expenses by item and detailed expenses. We can do that, and we can do, as you can see, this is, for example, the expected versus actual, and this is expected versus actual online, item by item, will tell me what is the expected, what is the actual for every item, and every single item is clickable where I can go to that item exactly. For example, this is on the general, this is how much the total expected, and these are the detailed expected. This is on another, for example, this is how much the 3,000, this is how much, I actually 3,000 is expected, and 500 and 1,200, this is the how much actually I paid on that. Let me see if I do the section 7, for example. Let me see section 7. It will show me, you see, it's a report, but it's a live report. This is live report. You're drilling on the data. You're looking at, for example, this interior finishes, electric install white, reference. This is the electrical installations. The value, expected value is how much, and this one, the expected value is how much. When did we say the expected start and expected end? And this is the actual spending on it, when that actual spending on it happened. How much did we spend on this? How much did we spend on this? And how much did we spend on that? And that's the total here, total expected and total actual. Really nice report. You can go, this is the expected versus actual. You can go to the detailed expenses. That's a report that's running right now, and it's showing its data not in PDF format. It's showing its data in really nice format like this, so I can view it. I can view it and I can drill down. If I can go, for example, let's go to the expenses by item. That's the expenses by item. Look what's nice about it. It will tell you this thing, put it in red. Why? Because the actual is more than the expected. This, put it in green, because the actual is less than the expected. And at the bottom it will tell you how much is the actual and how much is the expected and how much is the actual. Really nice report. That's what Prosper gives you, without you have to do anything. You only need to enter. You have to do some financial engineering at the beginning to tell the system your expectations. It depends how your expectations are, good or bad. But from your know-how, that's what your expectations of the business will give you. Prosper would manage the whole cycle for you. If you have one, or if you have 100 projects or 1,000 projects or 1 million projects, it doesn't care. It gives you a very nice way to handle these. This is, for example, as you see these have a different icon because it's a special report that you run that report, and that report automatically is a live report, what we call. It's not, as you see, it's not a PDF file. It's a report that you can see here, where everything here is clickable. When you click on it, automatically you would go to that payment that was done, and you can come back here at any time, going back to where you were. This will finalize my the section in the expenses section of the project, and I hope that I am trying to add value to you. Thank you.